Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Hey, this is Stan the Annuity Man. I'm America's annuity agent, licensed in all 50 states. And I pretty much represent every single carrier out there, pretty much all of them. So I really don't have any skin in the game other than I want to see the highest contractual guarantee quotes for your specific situation. That's the goal. That's how we do it. I don't steer you toward a company or a product. We're going to quote and try to find the best contractual guarantees because annuities are contracts. They're transfer risk contracts, and you buy them for the contractual guarantees only. Topic of the day is about what Washington, D.C. is doing with annuities and retirement and this new Secure Retirement Act that everyone's talking about. There's a lot of misinformation about that. I'm going to strip it all down to where it's understandable. You'll understand how it can benefit you and some of the limitations as well. Like anything D.C. gets their hands on, the intentions are good initially, and then once they get a hold of it, they end up screwing up a lot of stuff. But I think overall, this is a good attempt to help people start planning for retirement. In essence, what DC is doing is they're tapping you on the shoulder and saying, oh, by the way, we'd really like for you, the individual American out there, to start planning for retirement income, to start putting that in place. And we're going to try to give you vehicles to do that. And we're going to try to help incentivize the companies to offer those things. Now, why would DC do that? Think logically. Number one, Social Security was never, ever put on this planet to be the primary source of retirement income. It just wasn't. And for anybody out there that says it should be that, they're living in a socialist dream. It's just not going to happen. In fact, I think what's going to happen in the future, there will be means testing, meaning that if you've really worked hard and saved and scrimped and put away money and done without, you're going to get penalized for that discipline. And they're going to say, well, you have enough money, you're going to be means tested out. Or, people my age, who knows if it's going to be there. I'm in my 50s, and certainly for my daughters in their 20s, who knows where Social Security is going to be. Now, I understand it's a political football, and it is the best inflation annuity on the planet. I do laugh all the time when people say, I hate all annuities. My comment is every single working American with a Social Security number owns an annuity. It's called Social Security. It's the best inflation annuity on the planet. Why do you say that, Stan the Annuity Man, number one agent in the country? Because the cost of living increase is a political football, not an actuarial football. So typically it's just, Congress voting to increase it to make the voters happy. That's cool, but that's not how annuity companies do it. If you put a cost of living adjustment increase on an annuity lifetime income stream, all the annuity company's going to do is ratchet down that payment to make up for that increase. They don't give it away. DC gives it away and figures out how to pay for it later. So what DC is doing, the politicians, they're realizing that Social Security is a mess, and from the standpoint of funding it, it's a big mess. Now, I understand there's, depending on what cable channel you watch, there's competing arguments with that. Some say it's okay, some say it's not. The bottom line is we're running huge debts, and Social Security is messy. And I think the government is subtly saying to every one of us is, hey, we really want you to start planning for lifetime income. Now, this whole nudging toward lifetime income started in 2014. In 2014, the Treasury and the IRS combined and worked together to create an annuity called a QLAC, and QLAC stands for Qualified Longevity Annuity Contract, QLAC. And what a QLAC was supposed to do was it's supposed to be used inside 401k type plans and traditional IRAs for future income. The contracts were irrevocable, meaning that there was no liquidity. Once you locked in the policy, then you're going to get your money back or someone in your family is going to get the money back if you die early, but it's a lifetime income stream guarantee for the rest of your life, regardless of how long you live. So that was the intention in 2014. Very good intentions. Okay. And that's 2014. The problem with that, and it was pretty much put in place for the 401k side, but the people that are taking advantage of it are the people with traditional IRAs. And why is that? Is because I read a story the other day that fewer than 10% of private sector companies have 401ks that offer annuity options. Well, that's 5 years after the fact when QLACs were introduced. And QLACs were introduced to make that 10% number go higher. So what did DC do? They went, well, QLACs was a pretty good shot at it. And, QLACs can be used in traditional IRAs where people are doing that. And that's where the majority of QLACs are sold. And I wrote the first book on QLACs. When I saw it come out, I thought it was going to be the top product ever. And I still think it's going to be the number one sold type of annuity in the future, because most people with traditional IRAs need to look at that for future income to at least set up income stream for their spouse or to combat inflation in the future. But because that didn't go over like they thought it was going to go over, I'm just guessing what they did. They came out with the Secure Retirement Act, which was signed into law December the 20th of 2019. So let's talk about what that is and the key points. Now, it's very, very detailed, typical Washington, whoever wrote it, a bunch of lawyers got in a room, ordered a lot of pizzas, and just went legal speak crazy on us. But I went through it, and I pulled out what I think is important for you to understand. Number one, for 401k people, that you're gonna have annuity options. You're going to have lifetime income stream options in most 401k plans. And the reason is part of that act holds those plan sponsors, the board of directors, or whoever's approving the plan, it holds them harmless. There's a fiduciary safe harbor for these people, which I'm not sure I agree with. And the reason I don't agree with it is it says in there they can choose the annuity companies that they want to put in their plan based upon their research, blah, blah, blah. Well, you and I both know that just reeks of problems. Soft money, good old boy handshakes, trips, dinner. I don't like it. Annuities are commodity products. They should be shopped with all carriers for the highest contractual guarantees. But because there's this Fiduciary Safe Harbor Act that holds these plan sponsors harmless, they could come in there and say, well, they literally could do, well, my brother-in-law works over here, my cousin works over here, and bring in those 2 or 3 annuity companies and have it covered the way that I read it. I'm hoping that's not true, because that's not acting as a fiduciary. But I guess that's the reason they said fiduciary safe harbor, which means that you are not acting as a fiduciary, which is interesting. But I guess whatever it takes to get lifetime income products inside of 401k type plans, defined contribution plans, I guess that's good. I'm going to look at it from a positive side. A couple of other things that you need to be aware of. Up until this point, when you reach 70 and a half, you couldn't contribute to your traditional IRA. Now there's no age limitations. So you can contribute if you want to, which I'm not sure that's a big deal. I think one of the things I found interesting, that they moved the required minimum distribution age from 70 and a half to age 72, which I never thought that was going to go through personally, because all that means is the IRS has to wait to get their money. Because what a required minimum distribution is the IRS tapping you on the shoulder and saying, oh, by the way, all that money you've been deferring for all these years, we'd love for you to start paying taxes on it. And not only do we love it, we're going to require it. That's required minimum distribution. But that's moved from age 70 and a half to 72. Obviously, there's some little asterisks in there. That rule applies for those born on or after July 1st of 1949. So, effective January 1st, 2020, this Secure Act, it raised the RMD age from 70 and a half to 72 for those born on or after July 1st of 1949. So, also under this new law, that people that turn 70 and a half in 2020 or later, they will not need to begin taking those distributions until the calendar year they reach age 72. All right? But those who turn 70 and a half by the end of 2019 will still need to take the RMDs as previously required. I know, you're just going to have to rewind and listen to that because that's convoluted legal mumbo jumbo. That's a great example of DC, good intentions, okay, we're raising it, and then they throw in all these asterisks that you have to be aware of. And I'm like the only one out here talking those details, I think. Most people are just broad stroking this thing. And I don't blame them, because reading that thing is like reading the tax code. It's tough. The other thing that you need to be aware of is that the stretch IRA strategy, when you take a stretch IRA and you can stretch it through, spouses and kids, the non-spouse part of that is gone away. So spouses, yes, non-spouses, no. But it doesn't affect non-qualified stretches. How about that? So stretching your IRA, but I get it, because most people's, the majority of their money is in traditional IRA asset. That's where the assets are. But instead of being able to stretch it over the wife and then the kids, it's just the spouse now. The non-spouses have been eliminated from that party. DC cracks me up a lot. I remember when the Roth IRA came through, and Roth IRAs is you pay taxes up front, and then that account, whatever money comes out of that account after that, is tax free, which sounds fantastic, and it is for a lot of people. But if you look at the country, is a very, very, very small percentage of people that have Roth IRAs, and I look at everything as voting blocks, right? And trust me, DC does as well. And I will tell you this, because I'm involved a lot with DC. I'm in DC a good bit, under the radar, talking to politicians and talking to people that put together policy, and giving my insight as Stan the Annuity Man, America's annuity agent, on all of this. Not as much as I should be, but they do call occasionally, and I do weigh in. I remember when the Roth IRA came in and it went through law, and it was great, and people loved it, and they started converting and paying taxes. I swear to you, day 2, I heard rumblings of, how do we tax that? the politicians didn't even take a breath. They're already trying to figure out, how do we tax Roth IRAs? And my prediction is, I wouldn't be surprised if they came back and said, well, it's tax free, but only if you stand on one leg and you've lost one arm, or something crazy, or something legal that they're just with too many holes and hoops to jump through. But the other thing that I heard up there, which is, they're always trying to get at the IRA assets. They're always trying to, because that's where all the money is. That's where the trillions and trillions and trillions of dollars are. So I heard rumblings up there, and I don't think this will ever go through. But another one, a DC nugget I'll give you, is I heard rumblings that they wanted to require, how about that word, require everyone to purchase United States treasuries inside of their IRA and pay a yield on it. So you say, well, that's what's wrong with that, Stan the Annuity Man? I don't know. It sounds like confiscation to me. And that's probably the reason it never went through. And that's probably the reason you never heard of it, because it never saw the light of day. But I actually heard those rumors. And anyone out there that says BS to that, to me, you don't know. Okay. People were literally talking about that in DC as requiring all IRA holders to purchase treasuries, which, where does that go? Straight to DC, money straight to DC, and they'll pay an interest rate. And of course, the comment, when I heard that, I'm like, that's crap. I'm like, no. It would only be a certain percentage. We'd never go above that percentage. And my comment was, really? You're never going to go higher than whatever percentage you put in? No, we'll never do that. Okay, I believe that. Not. So I say that because I see everything coming out of DC, and I look at it kind of through a different lens. And you should too, and you probably do, because we're all non-trusting of those people that need to be term limited. But the one that really, the Secure Retirement Act is not a bad deal, because I think that people in 401ks need to start planning for income. They need to start thinking about income, and they had to incentivize companies to offer these lifetime income products inside these defined contribution plan 401k type plans. And the only way they were going to do that is to create that fiduciary safe harbor to hold these people harmless, so they wouldn't be sued into the ground. The only problem with that is, I think that the consumer loses on that, because there's not going to be the choices needed to find the highest contractual guarantees. Now, Are the rich going to get richer with this, meaning the bigger companies going to get richer on the annuity side? Yes, because all of these people are going to, gravitate toward the monster annuity companies, the good old boy handshakes to get them in their plan. I get all that. But, I'm waiting for the call, and it will come in that they'll say, well, Stan the Annuity Man, America's number one agent, America's annuity agent. I got this quote from the 3 carriers that are approved in my 401k plan. Can you run the quote with all the other carriers out there offering this similar product and tell me which has the highest contractual guarantee? What happens when the numbers that I produce from the remaining, all of the other carriers that aren't in that plan, and they just destroy that number? What happens then? Well, obviously you can't sue the board or the plan sponsors or people like that because there's a fiduciary safe harbor act. But the point is, that's not how you buy annuities. You buy annuities shopping all carriers, looking for the highest contractual guarantee, not thinking about the carrier's name, not being steered toward the preferred carrier of choice or a carrier that a board or director has chosen based upon what they think is best for you. Anytime someone's making a choice of what they think is best for you, whether it's an annuity agent or the government, that's garbage, okay? It is. You make that choice. You shop all carriers. Now, we can provide that at theannuityman.com because that's my business model. My business model is to shop everybody, send you the quotes, give you enough information, send you my books, you listen to the podcast, you watch my videos, and then you make a decision on your terms and your time frame. That's not what's going to happen in the 401ks offering annuity options. Okay. Now, the good news is I think DC is going to get what they want, which is people trying to plan for future income, which will, I guess, lessen the dependency, on Social Security, or that they can means test it easier. I don't know. Anytime they do that, I always envision people with those tiki torches, like millions of people with tiki torches, like marching on the square in Washington, D.C., saying, don't touch my IRA, or you're screwing with us, with our retirement type thing. I hope we never reach that tipping point, but you never know, right? So that's kind of what's happening with the Secure Retirement Act that just got enacted, and DC in general. They're looking at your IRAs. They're trying to figure out how to tax your IRAs. The states, states like California are already doing an annuitization type tax on annuities, and trust me, that is going to spread because we're spending too much money, and they need more money. They meaning the politicians, they meaning the states, they meaning the Fed. They need more money, and guess who's got it? You got it, and I got it, because we planned and we scrimped and we saved and we worked hard and we put money away and we did without and we did what we're supposed to do. But unfortunately, in this world, there's more takers than there are givers. Or is that right? They call it the haves and have-nots. I'm not sure about that. I think it's people, the dues payer and the non-dues payer. Unless you're an inheritance baby or a trust fund baby, and there's some out there, and they're a joke. They'll run through that money. But most of us, you included, listening to me right now, nod your head, have worked hard for what we have. We've worked hard, and we don't want to give it away, right? I mean, we're charitable. We love people, but we don't want to give it away to people that haven't worked hard, do we? I don't think so. I digress a little bit politically, and I don't like either party, just for the record, because they both seem eerily similar in a lot of cases. But remember this, and with annuities, period, they're commodity products, they're contracts, they're transfer risk strategies, and you own them for the contractual guarantees only. You own them for what they will do, not what they might do. You never, ever, ever buy an annuity for the hypothetical, theoretical, back-tested, hopeful agent return scenarios. Buy it for the contractual guarantees because you own that contract. Now, I would encourage you to go to I got a new YouTube channel, and I put out a video every Monday through Friday, a new one, 5 a week. I know you're saying that's crazy. Of course, that's who I am. I mean, I'm trying to educate out here. I'm Stan the Annuity Man. But go to YouTube and pull up Stan the Annuity Man. You'll see my videos there. They're short, 8 to 10 minutes, very informative. I'm also trying to write an article every single day or every other day on some of the major platforms. Right now, I'm writing for thestreet.com. I would go there and check out The Annuity Man. because I'm there. But I really appreciate you joining us. If you have any questions about the Secure Retirement Act or anything that I covered, please feel free to contact us at theannuityman.com. You can set a time to speak with me or one of my team members who are all really, really good. I really appreciate you joining me on Fun with Annuities. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MIGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 Annuity Owner's Manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.